Welcome back to Crypto Shockwave, the channel where we break down the biggest stories in the XRP world and give you the analysis that actually matters for your portfolio. $62,000. That is where Bitcoin is trading right now, down from $71,765 just 3 days ago. $1.8 billion in leveraged positions, wiped out, gone, in 72 hours. 272,000 traders, liquidated in 3 days, and XRP sitting at $1.12, a 15-week low, the lowest price since February. This is not a normal pullback. This is a liquidation cascade. And today, I am going to show you exactly what triggered it, why it happened so fast, and most importantly, what the smart money is doing right now while everyone else is panicking. Stay with me, because what I am about to show you could be the most important thing you watch this week. So let us start with what actually happened, because most people are blaming the wrong things. Bitcoin did not crash because of one piece of bad news. Bitcoin crashed because the market was primed to crash, before anything even happened. On June the 2nd, Bitcoin's futures open interest leverage ratio hit 2.63%, the highest reading since October 6th, 2025. The same reading that preceded the last major crash. The perpetual futures version hit 2.48%, also the highest since October 2025. What does that mean in plain language? The market was sitting on a mountain of borrowed money, leverage piled on leverage, and all it needed was one spark. That spark came on June the 2nd. A midday flash crash knocked Bitcoin from $71,765 to $67,895 in hours, not days, hours. That triggered the first wave of liquidations, which triggered more selling, which triggered more liquidations, which pushed price lower, which triggered even more liquidations, gradual, then sudden. That is how leverage unwinds. And once it starts, it does not stop until the borrowed money is gone. But wait, because here is what nobody is connecting right now. Bitcoin fell 51% from its all-time high of $126,200, set in October 2025. 51%. And here's the number that changes everything. Strategy. Michael Saylor's company, the single largest corporate holder of Bitcoin on Earth, just watched Bitcoin fall below their average purchase price. For the first time since late 2023, Michael Saylor bought hundreds of thousands of Bitcoin at an average price above current levels, and right now, that entire position is underwater. When the most famous Bitcoin bull on the planet is sitting on losses, you understand the scale of what just happened. Now let me bring XRP into this picture, because this is where it gets interesting. XRP fell to $1.12 today, down 6.85% in 24 hours, down from $1.33 at the end of May. $8 billion wiped from XRP's market cap in 1 week. And here is the pattern that every XRP holder needs to understand. When Bitcoin drops, XRP drops harder. The historical ratio this year has been 1.8 to 1, meaning for every 1% Bitcoin falls, XRP falls 1.8%, every single time. Consistent, predictable, and brutal for anyone holding XRP on leverage right now. Stop right there, because I need to show you something that the panic headlines are completely ignoring. While 272,000 traders were being liquidated, while Bitcoin was crashing towards $62,000, while XRP was hitting 15-week lows, something else was happening, quietly, underneath all the noise. The 5 United States spot XRP ETFs pulled in $25.8 million on Monday alone. $25.8 million, the largest single-day inflow since January the 5th. The same day Bitcoin ETFs were bleeding. The same day Ethereum ETFs shed $17 million. XRP ETFs going the opposite direction. Again, when the tide goes out, you see who was swimming naked. And right now, retail is selling, and institutions are buying at $1.12, with $25.8 million in a single day. That is not panic. That is positioning. But wait, because there is a second number that makes this even more powerful. The fear and greed index is sitting at 25. 25. That is extreme fear territory. And here is what history tells us about extreme fear readings. Every single major bottom in crypto history happened during extreme fear, not during greed, not during excitement, during fear. When the index hit 20 in February 2026, XRP was at $1.11. It then recovered to $1.55 within 6 weeks. The index is at 25 right now, $1.12 right now. The setup is almost identical. Now let us be completely honest, because I always show you both sides. The bear case right now is serious, and I will not pretend otherwise. Bitcoin has broken below $63,000. It is now more than 51% below its all-time high. Macroeconomic pressure is real. Sticky inflation, Federal Reserve uncertainty, United States dollar strength. These are not small factors. If Bitcoin loses the $60,000 level, analysts warn XRP could test $1. That is not a crazy scenario right now. That is a real risk that every holder must respect. ARK Invest's latest research shows Bitcoin ETF outflows hit $2.4 billion in May, the worst monthly result of the year. That selling pressure does not disappear overnight. But here is the reframe. The same ARK Invest that is tracking those outflows projects Bitcoin reaching $761,000 by 2030. Standard Chartered raised their XRP 2030 target to $28 last month. Goldman Sachs exited their position. They did not short. And $25.8 million of institutional money entered XRP ETFs on one of the worst days of the year. Smart money buys in the dark, while retail sells in headlines. And right now, it is very dark. So what are the 3 signals you must watch right now? Signal 1. Watch Bitcoin at the $60,000 level. This is the line in the sand. Bitcoin briefly touched 60,000 in February and bounced hard. If it holds 60,000 again, the liquidation cascade is over and recovery begins. If it breaks below 60,000 with heavy volume, XRP tests $1. This single level determines everything in the next 2 weeks. Signal 2. Watch daily XRP ETF inflow numbers. 25.8 million on Monday was the signal. If daily inflows stay above 10 million during this crash, institutions are accumulating. If inflows dry up and turn negative, the institutional bid is gone, and the bear case accelerates. Signal 3. Watch the Clarity Act Senate floor vote. June 15th to 18th is the window. If the Senate schedules that vote during maximum fear, the relief rally will be violent. Markets priced in the Clarity Act committee passage with a move from $1.20 to $1.55. A full Senate passage during a crash bottom could be an even bigger move. Let me bring this home for you now. $1.8 billion liquidated. 272,000 traders wiped out. Bitcoin down 51% from its all-time high. XRP at a 15-week low. And yet, 25.8 million institutional dollars entered XRP ETFs on the worst day. Fear and greed at 25, almost identical to the February bottom setup. The Clarity Act Senate vote 13 days away. Patience is not waiting. It is knowing what you are waiting for. And right now, everything you are watching is the setup, not the ending. If this video gave you the clarity you needed in one of the scariest weeks in crypto this year, hit that like button right now. And share this with one person who is panicking right now, because they need to see these 3 signals before June 15th. If you are not subscribed yet, hit that subscribe button right now. Turn on notifications, because the next video we are dropping could be the most important one you ever watch. Stay wise, stay positioned. I will see you in the next one.